Hey everyone, I'm Charting Man Dan of the Chart Guys, trader and technical analyst. In this video, we're going to check in on the markets as the bears confirm weekly downtrends in the financial sector, Apple, and the NASDAQ. We did get that biotech sector bounce, but very few green names out there today. We're going to check in on the short term as well as the longer term setups. Let's get to it.
So we were keeping an eye out for a couple-day bounce to try and get going after the strong close yesterday, but overnight the red flags were firing. I woke up at 6 a.m. and the red flags were already there with the pullback that we had seen overnight. And you can see we opened right at the low of yesterday, first thing, and then followed through for the bears. And there was a very interesting relationship with what was going on with correlations for the first 30 minutes this morning. And we had big tech names dumping. Amazon, Google, Microsoft, and Apple were all leading the way to the downside. And, Amazon was just in free fall. If you're not even touching 1 minute EMA 12 in whatever direction, if you don't touch it for 20, 30, 40 minutes, that's as strong a trend as you can possibly see. And so Amazon didn't touch 1 minute EMA 12 from 9:43 until 10:20. So essentially 30 whatever minutes of absolute bear control. But while that dump was happening, growth names were going up. ARKK had a strong start to the morning, and it didn't touch 1 minute EMA 12. There was some strange rotation going on. And aside from that, it was, my cannabis names were green, my psychedelic names were green, the biotech sector, and growth, while big tech was dumping. And then eventually a lot of that growth rolled over and joined the bears. But even NVDA and Tesla were ignoring NASDAQ weakness for a lot of the morning. And perhaps it's, reshuffling, rebalancing heading into the end of the quarter here. But either way, the simple statement is true that big tech led the way down in a big way. And we had, the bulls yesterday just grinding and battling all day to put in that candle. And then just giving it all up without even really a chance during today's trading. Because again, we started right at the low and then just dropped through. So now what? At the end of this video, I'm going to post a clip about the longer term timeframes that is going to give some insight into the longer term. In the rest of the video, going to talk more about, what we're looking at over the next week or so into the end of the quarter this week. And we are now just hitting daily oversold conditions for the first time in SPY and QQQ. You can see SPY is just getting there, and we have the weekly downtrend confirmed. And one thing that kept me from looking for any bounces today and looking long was the fact that we're not really oversold on any time frame in any meaningful, extreme way. The hourly RSI didn't get oversold. Essentially what yesterday did, that short-term bounce, is it cooled off hourly and 4-hour RSI levels to allow for a significant further downside here. And so the futures chart, the 4-hour RSI is only just getting oversold, and it has cooled off over the previous days. So we're not at oversold extremes. So that keeps me a bit more patient and cautious before looking bullish, but definitely keeping an eye out for daily bounces now that we have dropped 7 days in a row in a stair-step pattern. But I'm going to be a bit picky. I'd like to see a gap down open tomorrow to be looking for a short-term bounce to get going. But otherwise, still going to be looking for daily lower highs to be the result of the next bounce. But at this point, flat in my portfolio. And I may take more hedges off of my portfolio if we get into daily oversold conditions for both SPY and QQQ, because QQQ is not there yet. And it is a back burner. I mean, the fact that QQQ just went up 50% from the fear lows and is approaching first daily oversold conditions, monthly time frame. What's the most likely scenario on this chart? It's a monthly high or low. It's just a question of where is that going to form. So watching for daily oversold conditions to take my shorts off out of my IRA. I'll reload them after a daily bounce, but and potentially we'll add some longs as well for the daily bounce. But again, I need to see the trade come to me exactly as I want it, which is ideally a gap. Remember the last time we bottomed out? The bears had a pretty sharp 3-day drop, and then the gap down marked that climax. It's a little bit different this time around, but the gap remains something I'm watching for. And again, looking for oversold conditions on SPY and QQQ to set a temporary bottom. Before we keep going here, on Thursday at 5 p.m. Eastern, Joey's going to be going over his webinar about making better entries. And it's the third part of a series of webinars. He's done 2 in the past that received really good feedback, and this is the third. So posting the link in the comments of this video, sign up for it. If you want the PDF and the info, it's free. Tesla. So Tesla held on really, really well. There was a point in the morning where, between the major tech names that I mentioned, all 4 of them were down between 1.5% and 3%. And NVDA and Tesla were both green. That's very unusual. If you asked me, if you told me that those names were down that much, what's the probability that NVDA and Tesla are green? I would say there's a 2% chance, but that happened today. And we then had, so right now it's a bear flag, and essentially it's going to be a race against the NASDAQ. If the NASDAQ gets a daily bounce going, Tesla bulls and NVDA bulls are positioned well. I'm talking about them both together. If the NASDAQ stays weak, these are just daily bear flags that are likely to roll over to fresh lows. So I'm still in my Tesla swing and pretty pleased overall to only be down, 1% or whatever from where we closed, and currently still up over 2% in that trade. So I've still got wiggle room to work with before my break-even stop would get hit. But NASDAQ has to bottom if we're going to see these names hold their weekly supports. Because again, the major weekly supports broke on a lot of names today. Tesla has tons of space for a weekly higher low. NVDA has less space, but also trying to hold for a weekly higher low right now. So going to be keeping an eye out as to whether the NASDAQ bounce gets going to help these names, but they are shaping up, NVDA right now is a potential rising wedge as the bull breaks the last couple of days or lacking follow. I like that channel better, not as much of a rising wedge. But long story short, it's just a question of, is the NASDAQ going to stay weak and these names are going to join the bears, or is the NASDAQ going to start bouncing so that we can hold the recent lows in these names? And that was this setup for today as well. I was talking about how clearly Tesla and NVDA are standing out stronger, but then we could see them weakening. And so I was posting trade setups intraday. The first one was Tesla, 2-minute head and shoulders looking for 15-minute consolidation. And right here, it was a little frustrating. I literally pulled up my short and I started filling out my order, and I look at the clock and I see that I'm 1 minute late for a meeting. And so, I said I'd be entering this trade right now if I wasn't late for a meeting, but I was late for a meeting. So left and it would have played out. But that led to the top being set. And that was the start of the stronger name joining the bears. And then from that point forward, we ended up pulling back 2.5% into the end of the day. And Tesla did the same thing. Here on Tesla, I was saying 15-minute lower high is the most likely result of the next bounce. Bulls are being cautious. And then we confirmed the 15-minute downtrend and bears took over from there. So that's the mindset, and started looking bearish in these names because the NASDAQ was not bouncing in any meaningful way. So again, it's the same mindset that I keep talking about with correlations. Tesla and NVDA are swimming against the current. They can only do so for so long. Either the current changes to help them, or they shift and then join the current. And so that was the example here. And so now the question is, does that happen on the daily or not over the next day or two? Biotech sector. So here's an example where technical analysis and trading are two different things. I nailed the biotech sector bounce, talking about it yesterday multiple times in the video. It was one of the main things I talked about in the video as a top watch for today. I made $0 on this bounce. Why didn't I go long? Because I was noticing significant red flags in the broader market. And the last thing I'm going to do is long a previously extremely weak sector when the NASDAQ, the S&P 500 are all giving me red flags and showing me the bears are still in control. And so, in hindsight, it would have worked out. But if you give me that trade setup, 9 times out of 10, I don't take it because of the broader market impact. And there was one spot, where could I have shifted that mindset? If you go to the 5-second chart, when the bell rang, there was a double top at the high of yesterday at 72.55. And so if the bulls are going to, first they have to break that level, which they did, but then they back tested and held it by 2 pennies. So if I, had my finger on the trigger, the play would have been, all right, broke the high of yesterday, back test and hold previous resistance as support. As soon as they hit that new high of the day at 72.80, could have longed there and then been risked, you know, that would have been a risk of maybe 25, 30 cents. And the reward was a lot more than that. So that would have been a low risk attempt. But again, I had no confidence seeing the weakness everywhere else that the biotech sector bulls could do anything, but they did. And they had really nice follow through. When you're counter trend, when you're seeing a move that is counter the trend and it's this significant, that's when a stair step is a better signal. You know, if this is, I'm trying to figure out what I want to say here. The 2-minute stair step marked the top, and bears then had a nice trade. You know, had to be real patient with it, but a nice trade from the 2-minute stair step breaking. It's essentially like it's self-perpetuating move, and then once it stops, the momentum is gone. It's like the bulls keep that momentum as long as they can when you get this extreme and extended, and again, still in a daily, weekly downtrend at that point. And so use those stair steps when you get that extreme. You can have more confidence. You know, if you go straight up half that much, you can definitely see uptrend continuation. But to go straight up this much, you know, up 3% or whatever it was, again, oftentimes that's when the stair step works its best. I'm pretty sure Joey tomorrow or Thursday is going to be talking about stair steps in this webinar. So a very useful trading strategy. So check that out. Cannabis names, we know daily lower highs are the most likely result of this bounce. ACB, daily lower high set, downtrend continuation. CGC, tons of space for an hourly lower high next bounce, watching a potential hourly head and shoulders. If that confirms, daily lower high is set. MSOS, we knew an hourly lower high was the most likely result of the bounce today because we had tons of space for it to form. And if we break this low of 792, the daily lower high is set. So tomorrow we've got a safe markup vote in the Senate, and that's happening first thing in the morning. And I'm watching for it to lead to volatility, and I'm watching for it to be not impactful, changing the charts. I'm going to be sticking with the price action. It's important to know a fundamental event is happening, to know, keep an eye out for maybe unusual volume, unusual volatility, but I don't see the bulls running with it significantly enough to break the highs of this move at this point. Maybe I'm wrong, but in terms of determining most likely scenarios, I don't think that we can break the high of this week on this news tomorrow. So keeping an eye out how the reaction goes. Again, still looking for weekly higher lows in this sector, but may still need to see further consolidation first. The financial sector confirmed the weekly downtrend. Zoom out to the monthly. We've got a beautiful year-long monthly equilibrium. The direction that this breaks is going to have significant implications on the broader market, and it may not break until Q1 2024. Our monthly lower high is now set. Anything above 30.12 is a monthly higher low, and it's possible we could pull back for a month or two more, and then we bounce for a month, and next thing you know, we're into next year and still in this tightening range. And if you look at the 4-month or 3-month long-term time frame, we're either going to roll over and confirm the first 3-month downtrend in a very, very long time, or not. So watching closely. And again, at the end of this video, I'm going to talk a lot more about the path forward from here. IWM, weekly head and shoulders confirmed. Nothing but bear follow through since then. And same thing here, we've got the monthly tightening up. Key monthly support, 166.99, coming closer into play. But it too is a year-long, over a year-long, tightening monthly range that it'll probably break either right at the end of this year or first thing next year. Although that's only, 4% away? It's not much. The financial sector bulls definitely a lot more space to work with. The dollar is still all bulls, and we still have space for a daily higher low to form when we next consolidate. That has led to a sell-off in gold. Sell-off broke the daily inside bar bearish and has followed through in a significant way, and we just hit the lowest level in weeks. The weekly lower high pattern remains. We're testing weekly support, technically broke it by a little bit, but again, this is an example of There was relative strength in the metals compared to the dollar. We're swimming against the current. The current is not changing, and we're now rolling over to join the current. And silver, not quite as weak as gold, but weak the last 2 days. Oil confirmed the daily downtrend with zero follow through. That's having the bulls looking for a potential bull flag. Inventory report is tomorrow. We'll have to confirm a 4-hour uptrend as a result of the next consolidation. But best case scenario for the bulls, breaking support straight into a V-shaped bounce and maintaining daily EMA 12. Natural gas, as we talked about, this is a beautiful example. I talked about the Tesla time frames, the 1 minute, 2 minute, 5 minute, 15 minute, and the fractals. This was a great example over the last couple of months where we had a tightening daily range break bull with no follow through. Zoom out. Tightening 2-day range. Broke bull with no follow through. Zoom out. Weekly equilibrium tightening range. Bulls have to hold 250 for the higher low, but it's a really good looking weekly equilibrium for the last 2 months now. So it's essentially, that's why we must zoom out every time something that we're watching comes to a conclusion. Where a lot of traders get in trouble is they'll watch a pattern and it'll break and they'll say good and they'll act on it and then they just keep watching that time frame. You can act on it, but zoom out and then observe, things that could happen that maybe you aren't expecting on the longer term time frame. So we'll see how natural gas breaks this weekly equilibrium probably within the next 3 weeks or so. But for now, it remains range bound and chopping around on the daily chart. I'm certainly sticking with the weekly for clarity. All right, sign up for the webinar. Here's some long-term stuff and some cave. Do good things. Hey everyone, so recently I made a video about the Tesla day trade and the relationship of different time frames and EMA 12 and how we confirmed one downtrend at a time from the 1 minute to the 2 minute to the 5 minute to the 15 minute. And now we're doing this on the longer term time frames. So QQQ, all bulls all summer. We then confirmed the daily downtrend for the first time. Okay, great, we zoom out. We go to the weekly. We watch the weekly and say, all right, weekly, we knew we were watching for a bounce. We knew a weekly lower high was the most likely scenario. The question then was, do we tighten up or do bears confirm the weekly downtrend? We now have our answer in XLF and in SPY and in many names. QQQ is literally testing it right now, but let's assume QQQ is going to join in and break support as well. Now we have a confirmed weekly downtrend. What does that mean? Zoom out to the monthly. And so now the monthly, what's the most likely scenario here? It's a monthly high or low. Unless we have some kind of high volume, huge news collapse, we're going to form a monthly high or low compared to the last one at 283.95. The bulls gave themselves a ton of space to work with over the summer move. But now we watch retracement size. Do we lose monthly EMA 12? Do the bears follow through enough so that we set a monthly high or low and then a monthly lower high and confirm a monthly downtrend? Just like we did on the daily and the weekly. It's fairly, organized and contained consolidation, but it's just changing trends one at a time. It's going from an all bull market in the summer to daily downtrend, weekly bounce, weekly downtrend. How long would it take to play out? Let's just say we have another red month in October. And then I'm just guessing. This is complete guess. We're taking it one day at a time as always. But let's just say monthly high or low in October. And then we bounce November, lower high, December, downtrend confirmed, January, and next thing you know, we're in the start Q1 of 2024, and we are smack dab in the middle of our long-term tightening equilibrium, and then we scout a 3-month high or low to be the result of that monthly downtrend. So that's making a lot of assumptions, but it's just a clear path forward as one of the ways that this could possibly play out if what has already been happening continues. So now the most important questions for the next 4 to 6 weeks for me is, what does this monthly pullback look like? Is it a monthly bull flag? It's now a lot less likely that it's a monthly bull flag with the confirmed weekly downtrends, but do we hold monthly EMA 12? As soon as we lost weekly EMA 12, that then made me confident to scout the weekly lower high. If we lose monthly EMA 12, that will make me confident to scout a monthly lower high as the result of the next bounce. So we're going to stay on top of this, but I just love the clarity from one time frame to the next. And this is the case for QQQ. It's the case for SPY. It's the case for individual names. Netflix. You know, Netflix last monthly consolidation low was down at 285. Meta has tons of space for a monthly higher low. If this 3-month lower high is going to shape up and lead to a tightening equilibrium, it's going to have to be a big enough monthly pullback. It's going to take a while, right? It's going to take like 4 months. We got to pull back for another couple months. We got to bounce for a month or two. We got to pull back for a month or two. It could take 3 or 4 months before that shapes up. So let's see how it plays out, but it's cool. I like technical analysis.